What is price action? Why is understanding price movement so important in successful trading and short-term investing? Before we see what price action means, it is important to know what price means and what price indicates. Then we will see the same on charts too. As you can see, price is the direct result of buy and sell of a particular product or service. And in the stock market, price indicates the movement of a particular stock or the index. You could of course apply it to forex, commodities and other instruments also. What causes these movements? It is buyers and sellers that take the price up and down. Let us take a look at some charts now. Take a look at this Nifty chart. This chart belongs to 12th of February 21. You can check the date here in this row below. Take a look at the way price has gone here. What do you see? The day opened with a big green candle and there were wicks on the top side. Price reversed with a big red candle, and then at this level you can see that there are big wicks on the downside also. So that means that there are buyers in that area. Price started to go up again and it started to rise steadily up to this level. As you can see, price rose to the level of nearly 15,240 and suddenly price started to crash. It started to fall steadily with big red bars, and at the level of around 15,200, price again reversed, tried to again go up, and finally it started to fall, and then a huge crash. Now this crash was nearly 160 points. So why this crash? What happened here? Looking at this big green candle, it looks as if price is going to go high. It's a nice big bullish candle. Price suddenly reverses. Those people who went long on the first candle had their stop losses below the candle. The red candle took their stop losses. Buyers were strong here at this level. Buyers started to push the price up again and the price went up. Now what caused this big crash? At nearly 2 p.m. between 1:30 and 2 p.m. So let us go to the chart of 9th February for a while. You can see that this day price was steadily rising and suddenly at the level of a little bit higher than 15,240, the price started to drop and it crashed heavily, which was nearly 200 points. Now let's take a look at the whole picture. So as a price action trader, when you look at this chart, what do you see here? What do you see in the price action? So somebody who had marked out this level on the 9th of February where Nifty had fallen nearly 200 points knew that there was some heavy resistance around this area. Now the area that I have marked, this box that you can see, is where the sellers are, and there are strong sellers in that area. Price crashed 200 points on that day. It fell further on the 10th and it began to rise. Price started to make big wicks in this area. So let's take a look at the 12th again. The level from which price fell was around 15,240, where price had fallen from on the 9th of February. Now somebody who has already marked out the level from where the price fell on the 9th of Feb knew that when the price came up again to the same level, there would be heavy resistance in that area. Let us take a look at the chart of 12th Feb again, when it tried to break this level twice and finally it had a crash, and this is not the place to go long. Looking at these green candles, most traders would go long here thinking that price would rally, and suddenly price reverses and a big crash on that day. So now let's take a look at what happened on the 10th and 11th. The day opened with a good green candle. The very second candle reversed. Now you can mark out this area. You can mark out the level of 15,000 where the price fell and reversed. Now most people thinking that the price was going to fall further would have shorted here. These wicks on the bottom side always suggest there are strong buyers. So never go short on such candles. Observe the wicks. Observe what the price is telling you. Now, when the price went back up to the level of around 15,176 on the 11th, the price took a resistance at the same area. As you can see, wicks on the top side, price could not break the resistance. Again at around after 2 o'clock, price tried to make a breakout, but big wicks on the upside and price could not break that level. So in the future, this is the level that you should have in your mind, which is important as a supply zone, and this is the level where you know that the buyers are. So around 15,000 to 15,020, this is the level at which the buyers are. We've all learnt in school that an increase in demand increases price. Price goes up as demand increases, and an increase in supply reduces price. It pushes the price down. So take a look at the graph here. So you can see the markings from 0 to 100. As the demand increases, the price increases. There is a direct proportion. And as the supply increases, the price falls. So this is what movement of price means. This is what price tells us. This is what you should be following in the market. So price action is nothing but the reflection of buyers and sellers in the market. It is really that simple. So that's it for today's video. I hope you liked the video. If you've liked it, please like, comment, share and subscribe to my channel. Thank you.